Hello, everyone. Unfortunately, I can't monitor the comments, so I want to know if I can't know if the sound is good or the visuals is okay, as I'm not able to see your comments out there. So I hope things are just working well out there. Okay, so I think I just got a confirmation now that I can go ahead with the live session. So, okay, so thank you very much, Carrie. I got your message, so I will just proceed with the live session. So I welcome you all to yet another promising session on the Extra and Speed Life's weekly price action based technical analysis. Well, as usual, in this session, we are going to be unraveling potential trading opportunities from the financial assets on our watch list, which of course we have been monitoring since the beginning of the week. And of course, we are relying on simple parameters such as trend lines, key levels, and of course, chart patterns to uncover valuable insight into the historical price movement of the current market structure. My name is Sharif Daramola, and as usual, for the next 1 hour, I'm going to be your host as we delve into the current market structures. So, with that being said, here I will. So, okay, my newcomers in the house, I didn't forget you. So, for those who are joining us for the first time, you're highly welcome on board, and I'm glad to have you around. So, what we simply do here is to come together on a daily basis to get ready for the New York's trading session. And of course, we during this time review our current position and at the same time strategically position ourselves ahead of the New York session. So the first thing we normally do here is to check on the economic calendar, of course. As you all know by now, for those who has been with me for quite a while, we know how important the economic calendar is for us, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. So, right here on the economic calendar, we have a couple of in fact, it had a handful of high impact events coming in from the United Kingdom and the US economic docket. So for today, we have the major key events from the Bank of England. So we have the Bank of England minutes, we have the monetary policy report, we have the asset purchase facility, and of course the key events, the interest rate decision, which majority in the market is looking forward to, as we are expecting a 25 basis point rate hike, which is the popular narrative in the market as at this moment. So we are going to be looking forward to what the actual data is going to be like. Then we also have the vote rate cuts, the vote rate hike, the vote rate unchanged, and the monetary policy summary. So all of this will be going on simultaneously, and this is going to be coming up in the next 48 minutes. So of course, we are still going to be live when that event will happen. So what we are going to be doing today is to try to dissect the GBPUSD charts, amongst which is of course part of our watch list for this week, and to see how we can position ourselves in such a way that we can catch any potential trading opportunity ahead of the event, during or even after the event. Then 30 minutes after the event, we are going to be listening to the Bank of England's governor, who is going to be giving a speech. And from this speech, we can get an insight into the health situation of the United Kingdom's economy too as well. And then in about 3-4 hours from now, we are going to be having another high impact event from the US economic docket, and that is the ISM Services PMI. So the ISM Services PMI is released by the Institute of Supply Management, and it shows the business condition in the US non-manufacturing sector. Well, it is worth noting that the non-manufacturing sector does not influence either positively or negatively the GDP as much as the ISM manufacturing does. So what we are going to be looking forward to is to see what the data will be. And anything above 50 is considered as positive for the US dollar, while a below 50 is considered negative. Now, from the previous data for the month of June, we have 53.9, and we have economics projecting a data of 53 for the month of July. So we're going to be looking forward to that one. And as technical traders here, we are going to be sniffing the current market structure on all the USD pairs we've been monitoring to see the evolution of market structures and patterns that we can use to guide our trading activity for today. So with that being said here, let's dive right into the business for today. And of course, the first asset on our watch list for today. Hold on a second. I'm trying to set up. Give me a moment, please. All right, so the next asset on our watch list for today is going to be the US All Spot, and it has been quite an interesting 24 hours for us here, as we had an opportunity to sell after price action did break down that ascending trend line we identified yesterday, hereby giving us an opportunity to scoop over 700 pips as we had 5 positions triggered during the course of yesterday's trading session. So let's run through how the week started for us in this community and how we positioned ourselves for these trading opportunities we took advantage of since the beginning of the week. So at the beginning of the week, we saw here, hold on a second, let me zoom in to where the week started. So we had the situation here where price action was confined within the $80.20 level and the $79.93 area to give us an insight into the level of indecision at the beginning of the week. Now, with that situation there, you know how we do it in this community. We always want to see if the market will either break down or break out of that range to give us an opportunity to trade. But what happened instead was the breakout of that resistance line, which of course I told you prior to the beginning of the live session that I had a buy position triggered, and I told us all to capitalize on that move. Had the breakout of the $80.50 level, then we also had the breakout of the $81 area, and on Tuesday we also capitalized on the breakout of the $81.40 level. Then we culminated that bullish momentum with the breakout of the $81.75 area. So it was quite a very interesting first half of the week for us all in this community on the US All Spot. Then during our live session yesterday, we were able to identify a simple setup. And one of the things we noticed during the live session yesterday was how as soon as price got into that highest point there, at the $82.15 level, we begin to see selling pressure resume around that area. And as a result of this, we had lower highs, which of course we connected to give us a descending trend line to work with. And one of the things we agreed here yesterday is that as long as price action remain below that descending trend line, we have no business buying the US All Spot. And the only condition we deliberated on yesterday that will make us to buy the US All Spot is if price action did break out, retest both the trend line and the $81.75 level, then we can join that bullish momentum. But of course, that never happened, as we saw selling pressure continued below the descending trend line, and we said that we are going to be anticipating the breakdown of the $81.40 level and that ascending trend line, which has been supporting that bullish momentum in the last 6-7 weeks here to signal a bearish momentum. And remember that during we also identify levels that we said we are going to be using to capitalize on that bearish move if price action does break down that ascending trend line, as you will see. So we had the $81 level, we had the $80.50 level, and we had the $80 level to capitalize on that bearish move. So for everyone who had been part of this profitable trade, well done to you for being on standby to have caught that opportunity. Now, for those who still have a sell position running at this particular point in time, you know how we do it. As soon as price action moves significantly well in our favor, we do want to be moving our stop losses to secure the current position we are in at this point in time. And if you look at the current structure here, I'm of the opinion that anywhere around the $79.70 area and of course the $79.40 level seems most appropriate and conducive to place all stop losses on all the sell positions we have, as of course we need to give enough room for price action to breathe. Now, with a secured sell position in this market, what is going to be our plans for today? How do we intend to manage our current position? Are we going to continue selling the US All Spot today, or are we going to be getting ready to buy? And before we go into the details here, I would like us to scale up a little bit into the higher time frame so that I can refresh our memories as regards to what we saw here on the US All Spot charts that led us into buying at the beginning of the week. Now, on the 4 hours time frame, the first thing we observed on Monday was the fact that price action has been very, very bullish since the beginning of the month of July. And to further emphasize the bullish momentum here, we were able to connect a series of higher lows here to give us these ascending trend lines. In fact, we had a couple of them to guide our trading activity for the week. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, with the situation we had here, we needed a key level to help us guide our trading activity for this week. So as a result of this expectation, we had the $80 level marked out for us at the beginning of the week. And of course, if price remains above the key level, we want to be looking out for patterns and structures to support the idea of buying. But if price drops below the key level, then at that point, we want to be looking out for structures and patterns that will support the idea of selling. Now, prior to the beginning of the week, we saw our price action broke out that $80 mark for the first time in a long time. And then we said we might likely be seeing a retest of structure that will incite an uptrend continuation, which of course happened. And as long as price remains above that ascending trend line, we said we will continue to look out for buying opportunity. And if you recall vividly what I said here yesterday, I said if price breaks down the trend line, we shall be selling, then we will join the bearish momentum all the way to the downside, where we shall wait and see how the market will react to the $80 mark, which of course shares a confluence with that major ascending trend line that we identified there. So we said here yesterday that if price action does find buy pressure above the structure, we look out for buying opportunity, and a breakdown definitely will welcome selling opportunities in this market. So you see what happened here. Price did break down of the key level, of course, and the ascending trend line to incite a selling opportunity. So right now, price action remains below both the key level at the $80 mark and of course both of the ascending trend line, which for us at this point is looking very, very bearish. So if I zoom out a little bit and look at the structure we have, you will see price action is currently trading below that ascending trend line we identified earlier. And with this kind of scenario here, it will make much sense to look out for selling opportunities as long as price remains below this trend line, and only look out for buying opportunities if we can find a significant structure that will support the idea of buying. Now, with this information we have gathered on the 4 hours time frame, let's scale down into the 1 hour time frame to see how we can manage our expectations for today's trading session. So going back into the 1 hour time frame, this is what I was able to spot this morning while trying to dissect and project what is likely going to be happening today in this particular market. So the first thing I observed here was that we had a support line at the $78.90 level. As you see, we saw buy pressure resume around this area, leading into this impulsive move. But one interesting thing about this structure is that price action was finding lower highs and lower lows that led to the breakdown of the $78.90 level to affirm the potential of a bearish continuation. Now, with this the identification of lower highs here, I was able to identify a trend line after connecting the series of lower highs to give us a descending trend line that of course we are going to be using to guide our trading activities for today. Now, as long as price action remains below that descending trend line, we'll have no business buying the US oil spot. Now, with the situation we had here this morning, price did break down the $78.90 level to give us a signal of a potential trend continuation. Now, I want to see this bullish move here as a retracement of the breakdown, where price action retesting both the $79.20 level and that descending trend line will give me that opportunity to join a downtrend continuation. So if you had missed out on that first opportunity, a sell stop order anywhere below the $78.90 level seems most appropriate to join a bearish trend continuation to the downside. So that is how we are going to be managing a sell position from this current market structure. However, in as much as we're looking out for selling opportunities here, you know how we do it in this community. We also want to keep tabs with the potential of the buyers too as well. Now, from this current market structure, what is it that we will see here that will make us want to negate the idea of selling and join a bullish momentum at this point in time? Now, that brings us to the importance of this descending trend line we identified earlier. As we all said, that as long as price remains below the trend line, we'll feel comfortable selling the US oil spot. But if at any point in time during the New York session today, price action breaks out of that descending trend line, then at this point we want to start considering buying the US oil spot. Now remember that we are not going to be getting too excited to join right away, so we are not having a buy stop order there. You can only have a buy stop order above the $79.20 level if you've already been part of this profitable journey we have been enjoying since the beginning of the week, so you can afford to leverage on the profits you've made so far this week to test waters around that area and see if the buy position will click. But if you are new to the US oil spot trade for this week, then what you want to be doing is to wait for confirmations to happen before you want to be joining any bullish move here. So as soon as we sight the breakout of the descending trend line, we shall scale down into our lower time frame, like the 5 minutes, 10 or 15 minutes time frame, to look out for confirmations that sellers are finding it difficult to drop below the descending trend line. So what we are going to see would reflect on the chart as this. It could be the retest of the $79.20 or the retest of the descending trend line, where continued buy pressure above the trend line will welcome an opportunity to join an uptrend. Now remember, we have major key levels here that we have been using to capitalize on that bearish momentum yesterday. Also, we used it to capitalize on bullish momentum too as well at the beginning of the week. So these levels here, if broken to the upside, will welcome more opportunities to capitalize on that bullish momentum. So we have the $80 level, we have the $80.50 level, and of course we have the $81 area where a breakout retest of the structures will welcome more opportunities to capitalize on this uptrend continuation. That is, if price action did break out of the $79.20 level and of course the as descending trend line here. So that is how we are going to be looking out for buying opportunities in this particular market. So let's mark these levels out on our chart, as we will be needing them as a reference point to guide our trading activities. So, but in the meantime, bearish momentum is what we are looking for. As you can see, price still remains below the descending trend line. So like I said, you want to be joining now or probably wait for a breakdown of the $78.90 level to join a bearish move to the downside. So our center of focus today is basically between the $79.20 and the $78.90 area, and depending on where price breaks out of at this juncture will be a signal of where price action is likely going to be going for today. So let's mark these levels out on our chart, as we will be needing them as a reference point to guide our trading activities for today. So I will have I will have asked that if you have any questions, let's drop it in the comment section. But unfortunately, I can't see. I don't have my comment section here because I'm finding it difficult to log in. But let me try one more time and see if I can get into the comment section here, so I can see if there are any comments or inquiries there. So I'll just try it one more time and see. If it doesn't work, then I will just move on to the next financial asset on our watch list, and I will just hope that things are quite fine over there. So not again, it says network restricted, so I can move in. So we shall move into the next financial asset on our watch list. So the next instrument on our watch list for today is going to be the USTech100, of course, as usual. And it has been quite a very interesting 24 hours here, as we had a major sell happen yesterday. In fact, we have been selling since the beginning of the week. Look at what we have here, very massive move. We have been selling right from Wednesday's trading session, as you will see, below the 15,690, and price action since then has moved over 400 pips in our favor. Now, before we go into the details of what we are going to be looking at today, I would like to refresh our memories. So let's go through how the week started for us, so we can have a background knowledge of where we are coming from and to anticipate when we are going to. And especially for those who had missed out on our first position, you can have an idea of what really has been going on in this market since the beginning of this week. Now, the first thing we observed at the beginning of the week, let me zoom right in so that we can see things clearly. So the first thing we noticed at the beginning of the week was how the USTech100 was caught within a range, and that was between the 15,810 and the 15,690 area, to give us an insight into the level of indecision at that particular point in time. And you know how we do it whenever we have this kind of range. We want to see price action either breaking out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with this situation in mind, there is another condition that we took into consideration, and that was the fact that price action has been very, very bullish, at least in the last couple of weeks. And because of this perspective in mind, we were of the opinion that it's very likely that price action will break out of that resistance line at the 15,810 level to signal a bullish momentum. So because of this perspective in mind, we anticipated that we will be looking out for buying opportunities at the breakout of the 15,750, which of course happened. We took advantage of that move and moved our stop loss accordingly. Like we always say in this community, that when price moves in our favor, we want to be moving all stop losses to secure the position. And if you had done that, you will be taking out the worst case scenario break even. Now, on Tuesday's trading session, we begin to notice how difficult it is for buyers to continue above the 15,750. So at this point in time, we begin to notice lower highs even within that range. And as a result of this observation, we were able to connect the series of lower highs here to give us a descending trend line to work with. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we will continue to look out for selling opportunities and negate all ideas of buying. And the only condition I said here on Tuesday to buy is only if we do have a breakout retest of the structure, which of course never happened. So I told us all, because of this bearish trend line, we shall position ourselves anywhere below the 15,690 to capitalize on the bearish move, which was exactly what happened. And since that moment, we have been selling the USTech100. Now look at what we have here. Remember, we identify key levels. Remember, we had levels at the 15,690, which welcomed our first sell position for the week, as you will see here. Then we had the second position triggered at the breakdown of the 15,520. This was right here on Wednesday's trading session. And I also told us all that if price action goes on to break down the 15,350, we will be adding more position to our existing trade. So currently we should be having a minimum of 3 positions running in profit right now. So the first position, hold on a second, let me take out this one out. Okay, so the first position right here, if you still have your sell positions running, the first position will currently be running with about 360 pips in profit. That's very massive. The second position here will be running with about 190 pips, and we have the third position running with about 50 pips in profit. So we have roughly close to about 600 pips in profit on the USTech100 so far this week. So it has been quite a massive profitable week for everyone who are taking advantage of this opportunity. So well done to you for taking advantage, for being on standby to capitalize on that move. So now with the situation we have now, you know how we do it. If you still have a sell position running, you want to be moving all stop losses to secure this current sell position while we look out for more opportunity. So personally speaking, I want to have all stop losses anywhere above the 15,400 and the 15,480. Of course, we do want to give enough room for price action to breathe. So with a well-secured position at this point in time, what is going to be our next line of action for today? Are we going to continue selling the USTech100, or are we probably going to get ready to buy? Now, one thing we should also take note of is the fact that we are expecting a high impact event coming up today from the US economic docket, which will have a significant impact on price movement on this current market structure. So because of this, the potential volatility is there, and we want to ensure that all position is well secured. Now, with this current situation, how do we intend to capitalize on the move? Now, the first thing we should observe here is the fact that price action has been bearish since the beginning of the week, and whenever we have lower lows and lower highs such as this, we want to be connecting the series of lower highs to give us a descending trend line to work with for this week. And in fact, if you look at the structure closely, we should be having a couple of trend lines here. So the first one here is this one right here. So I will be marking that out. So you need to be marking that out on your chart. Then another one is around this area here, which of course we also, hold on a second, I want to project this. So I want to project this like this. So I will be reducing the thickness of these ones. Okay. So here we go. So let's go back to our candle chart right now and let's see what we have. So right now, going into the New York session, we have a series of trend lines which we are going to be using to guide our trading activities for today. And in fact, as long as price action remains below this trend line, we have no business considering buying this option for today. So since price action still remains below this trend line, we will continue to look out for patterns and structures that will support the idea of buying this asset. Now, with the situation here, remember we had this key level at the 15,350, which of course shares a confluence with um, all of these trend lines we have here. Hold on a second. Is it 15,350? I don't think so. I think it's 15,390. Yes, 15,390. So I want to readjust this, and then you want to do that too as well on your chart. Very important, as we are going to be using this to guide our trading activities today. So right now we have a breakdown of the 15,390. In the last 24 hours, price action just broke down that structure to the downside. And since that moment, price action has been trading below that level. And we all know from a technical standpoint, when price action breaks down a key level such as this, we expect that at some point in time, price is likely going to come back to retest that structure in anticipation of a downtrend continuation. So price could still come back into this level or any of these trend lines where the appearance of selling pressure or rejection of these trend lines or structure from the sellers will welcome an opportunity to sell below the 15,390. So we want to keep that in mind while we continue to monitor price action around this area. Now, what happens if price action does not climb to the upside but instead continue to drop to the downside? Then if that is the case, we already have a structure here. The lowest point where price action has been for this week is at the 15,250 level. So we want to be marking that area out, as we will be needing it to guide our trading activity for today. So we have the level 15,250. Mark that level out on your chart. Very, very important, as we will be needing it to guide a trend continuation to the downside. So if price action does not climb up anymore and instead it continues to drop to the downside, then a breakdown retest of the 15,250 will welcome more selling opportunities to capitalize on this downtrend continuation. Now, for those who are already profitable so far this week on the USTech100, we can afford to leverage on the profit we had made so far this week to test waters below the 15,250. So a sell stop order for those who are already profitable seems most appropriate below the structure. However, if this is your first time going to be trading the USTech100, then you will need a confirmation to happen before joining the bearish move. So if we have a breakdown of the structure, as soon as the breakdown happens, you want to be scaling down into your lower time frame, looking out for retest of structure signs that buyers are finding it difficult to stay above the 15,250, and this will reflect on the chart as retest of the 15,250 level. Then we can join the bearish move to the downside. So this is how we are going to be looking out for selling opportunities today. So let me recap that quickly. The first one here is I said price might likely come into any of those trend lines or the 15,390 where continued selling pressure will welcome selling opportunity. And if price does not climb up and instead continues to drop, then a breakdown of the 15,250 will welcome selling opportunities. Now, in as much as we're looking out for selling opportunities here, you know how we do it in this community. We also want to keep tabs and consider the potentials the buyers also have in this market. Now, if we are going to consider buying the USTech100 today, what is it that we will see on this chart that will make us feel comfortable negating the bearish idea and holding on to a bullish idea here? Now, for me personally, before I can consider buying the USTech100, How would we want to see price action take out all the descending trend line we have identified here? So a breakout of this descending trend line will be a significant signal that we are likely going to be seeing a momentum shift anytime soon. And remember, we are not going to be getting too excited, as for this week so far, price action has been on a very robust bearish momentum. Hence, we will need a confirmation before joining any bullish move, as a breakout of any of this trend line could still turn out to be a false breakout. Hence, once we sight a breakout of the structure, we shall be scaling down into the lower time frame, such as your 5 minutes, 10 or 15 minutes time frame, to look out for confirmation that will support the idea of buying. And of course, this would reflect on the chart as price action retesting the structure, the retesting the 15,390 on any of this trend line. But most importantly, we want to continue to see buy pressure above these structures to confirm that truly we can join a bullish momentum to the upside. So this is how we are going to be capitalizing on any buying opportunity at this point in time. So we will need a breakout of the structures to confirm that truly we want to be joining any bullish move. Now remember, we also have multiple levels here that can give us an opportunity to maximize the potential of that bullish move. So we have levels such as the 15,520, 15,600. Of course, these levels helped us to capitalize on the bearish move. We can also use it to capitalize on a potential uptrend continuation if price action goes that far. So this is how we are going to be capitalizing on any potential trading opportunities in this particular market. So this is how I'm going to be managing my position on the USTech100 for today. So we'll be taking the next 10 to 15 seconds to give you the time to mark out these levels on your chart, as you will be needing it as a reference point to guide your trading activities when you're about to make your independent decisions. So I hope the time is enough for you to mark out those levels on your charts so that we can move on to the next instrument. I'm already short of time. So the next financial asset on our watch list for today is the GBPUSD. Another phenomenal trading opportunity we had on this asset yesterday as we continued to ride that bearish momentum to the downside. Now, first of all, let's run through how the week started for us. Remember, at the beginning of the week, we had a couple of stop losses. That was it. But fortunately for us, we were able to recoup the losses we incurred at the beginning of the week. And in fact, we are tremendously in profit at this point in time. So at the beginning of the week, we noticed our price action was initially confined within that range between the 1.286 and the 1.2845, giving us a flat channel to work with. And for the fact that price action was sitting on a very strong accumulation zone, which was characterized with a lot of buying pressure here. So for the sake of those who are not part of our live session at the beginning of the week, let me quickly show you what I'm talking about here. So we saw here that price action was trading above that accumulation zone, which is an area where sellers have always struggled when price action got into that area. You will see at every point in time, as soon as price gets into the structure, we saw buy pressure resume around that area, negating all attempt by the buyers or by the sellers to break through that structure. And because of this understanding at the beginning of the week, we decided that we are going to be capitalizing on the breakout of that range. So I'm back to the 1 hour time frame here. So we were capitalizing on that scenario we saw there on the 4 hours time frame, that a breakout of this 1.286 will welcome an opportunity to buy, but unfortunately, we were taken out in a loss on both occasions. We had a buy entry. Now, following the scenario here, we saw how price action now finally broke down our support line at the 1.28450 to give us our first sell position for the week. As you will see here, that it was triggered at that point, and since that moment, we have been selling the pound sterling against the US dollar. Now, with the situation here, remember we also identified a couple of trend lines, which after connecting the series of lower highs, we had them figured out here. As we said that as long as price action remains below those descending trend line, we shall feel comfortable selling the GBP USD. And this has guided our opportunities as we continue to ride that move all the way to the downside. Now, with the situation here during our live session, I think I just lost my network, right? I can't even monitor, but I can see that my network is not moving. So let me quickly change my router to the other one so that we can go back live. Give me a moment, please. All right, so we should be back live on now. So you should be seeing my screen by now. So I had to switch my router to let us have a better experience now. So sorry for the break in transmission, and I hope this works through to the end of the session. So back into the GBP USD. So like I was saying yesterday, I said yesterday we now had a new setup that we said we were going to use to guide our trading activity. And one of the things we acknowledge is the fact that as long as price remains below this descending trend line, we had no business considering buying this asset. Now, during our live session yesterday, we saw something that looked like a potential reversal pattern. Actually, after considering this impulsive move, we saw how price was unable to break the previous low, giving us an ascending trend line. And of course, a double bottom structure where we identified the 1.27980 as the neckline we want to be using to confirm and validate that reversal pattern, where we said a breakout retest of that structure will welcome buying opportunities in this particular market, which of course never happened. And we said here yesterday that if this does not happen, then a breakdown retest of this ascending trend line will welcome more opportunities for us to capitalize on the bearish move to the downside. So we saw the breakdown happen, breakdown of the 1.27780. We saw the retest of the trend line, and since that moment, price action had continued to drop, find lower lows in this particular market. Then remember, we also acknowledged the 1.27480, which we said a breakdown also will welcome more selling opportunities in this particular market. So this is how we added more sell positions to our existing trade, and since that moment, price action still remains bearish in this particular market. And if you are taking advantage of these last two opportunities yesterday, the first position right now should be running with about 120 pips in profit, while the second position should be running with about 90 pips in profit at this point in time. So you will be having about 210 pips in profit on those two positions in the last 24 hours. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on that move. Now, you know how we do it. As soon as price moves significantly well in our favor, the next thing we want to be doing is to move our stop losses to secure this current sell position. And from what we have here, we need to give enough room for price action to breathe. So anywhere above this 1.2700 area seems most appropriate to secure this current sell positions while we give enough room for price action to breathe. So now, with a well-secured position at this juncture in the market, what is going to be our plans for today's trading session? Now, remember, we are looking forward to a major event coming up today. That is the Bank of England's interest rate decision and other handful of high-impact event from the UK economic docket. And by now, I think the event should have happened. Okay, we have 5 good minutes into that event. So you can see it's about 5 minutes into the event right now. So we want to see how the market is going to be reacting to this event. Now, let's go back into the live chat now so that we can position ourselves strategically to capture any potential bearish move. So at this point in time, we have a good sell position running. You want to extend your TP target enough so that you can give room, because if the volatility happens, we might see a slice in price to the downside or to the upside. So at this point in time, we remain bearish as long as price action remain below the descending trend line. So we have another level here at the 1.26720, which of course we want to be marking out on our chart, 26720 level, marking that level out on our chart, as we will be using that to guide our trading activity. That is, if price comes back to this area, retest the structure, a further breakdown will welcome selling opportunities to the downside. So it still remains bearish at this point in time. Now, I think that because we are going to be seeing a rate hike today, please listen to what I just said here. I think, that is my projection, what I think. We are still going to listen to what the market is saying, of course. I think because of, and this is coming from a fundamental perspective, I think that because of the interest rate hike today, majority might go back into buying the GBP, the pound sterling, because one, we've sold enough. Secondly, the pound sterling looks very much cheaper right now to buy. And thirdly, because of the high yield in return, considering the high interest rate hike, So when we invest in the pound sterling, because of the better rates compared to the US dollar, which is about 5.0%, investors and traders and key players in the market will want to place their money on the pound sterling. So if the interest rate hike come higher, then we might likely be seeing a bullish momentum. And if that is going to be the case, where do we think is appropriate for us to join a bullish momentum from this current market structure? So looking at what we have here, so I was able to identify a descending trend line. Since the later part of the New York session yesterday, we saw how price action has been finding lower highs. And for me to start considering buying here, I want to see price action break out of this descending trend line, which of course shares a confluence with the 1.2700 level. So a breakout of this structure will be that opportunity for me to join the bullish move. So we can have our buy stop orders sitting just right above that area, with the anticipation that a breakout of that area will trigger our buy position. So let's see what the event will come out with. So we have about 2 minutes to go right now into the interest rate decision. Let's see if the bullish momentum will happen. Now, if the bullish momentum happen and price action continues to climb new highs, then remember that we have levels like the 1.27480, we have the 1.27780, where we want to be having buy stop orders to capitalize on that uptrend continuation. And in fact, a breakout of the 1.27880 would have broken out of that descending trend line that started this week. So it's important that we see how the market will react to those levels. If price action moves significantly in that direction, ensure you move all your stop losses, secure your positions, as a breakout of that level will welcome more buying opportunities, and appearance of selling pressure is likely going to be inciting a bearish move to the downside. So let's ensure we mark all those levels out on our charts, and let's see how this will play out as we anticipate the Bank of England's interest rate decision. So I wish you all best of luck on this one. Unfortunately, I can't ask questions because I can't see my comment box. So let's see how this will play out, and trust me, if you follow this instruction, you will be able to capitalize on that move when it happens. So I will be moving on to the last instrument on my watch list, which is my favorite, and that is the XAUUSD. That's popularly known as the gold spot. So on the gold spot, the last 24 hours has been very, very interesting. This week so far, in fact, has been very, very profitable for us. We've had situation where we bought the gold, and we also had situation where we sold the gold too as well. At the end of the day, we are very profitable on this commodity. So let's quickly run through how the week started so that we can have a background knowledge of where we are coming from, and for the sake of those who are joining us for the first time, to see how we were able to capitalize on the trading opportunities that the market presented to us. Now, at the beginning of the week, we saw how price action started up with a very strong bearish note initially, actually, as we saw lower lows and lower highs. But interestingly, as soon as price action got into the $1,953.40 level, we begin to notice continued buy pressure around this area. Then besides that one, in addition to that one, we saw this sharp rejection of this ascending trend line, giving us a hammer candle, which from a technical standpoint is a very, very strong sign that buyers are present in the market. Then coupled with the structure is the fact that price was sitting above an ascending trend line, which of course we normally look out for buying opportunities as long as price remain above that structure. So with all these parameters identified at the beginning of the week, we positioned ourselves above the $1,956.50 level to capitalize on this bullish momentum. And as a result of this, we had our first buy position, and we kept on maximizing the potential of that bullish move by adding more positions at levels such as the $1,960.40, the $1,963 level, and of course the $1,967 area, giving us a minimum of 4 positions running on this market structure to capitalize on that move before the bearish momentum began. So it was a profitable first half of the week for every one of us in this community, as we rode that move all the way to the upside before the bearish move began. Now, during our live session on Tuesday, was it Tuesday? Yes. We saw the situation where price action came back into that zone around the $1,956.50 level. And remember, that area was that same spot where we bought the XAUUSD at the beginning of the week. And because of this situation, we said that because of the memory for buying power around that area, that we are going to be looking out for more buying opportunity around that area. Then remember, we also have the ascending trend line, which of course also supported the idea of buying. And one of the things we said here on that day is that for those who are already profitable on the XAUUSD, we can afford to have a buy stop order above the $1,956.50 level to capitalize on that move, and that if we are joining for the first time, a breakout retest will be what we are looking out for. So we didn't see the breakout retest, so newcomers were not able to buy, but for those who are profitable on the XAUUSD, we bought at that point, but unfortunately, we were taken out in a loss on that one. Then remember, we said here that this ascending trend line, if broken to the downside, we are going to be getting ready to sell. And of course, we saw that happened. We saw the breakdown. We saw the retest of structure. We joined the bearish move to the downside. And since that moment, price action has been bearish. Though yesterday we saw a pattern just like what we saw on the GBPUSD, that price action may likely go through a reversal pattern, as you will see, and we said a breakout retest of that 1952-ish will welcome buying opportunity. Of course, that one too did not happen. And remember, we also had this ascending trend line here where we said a breakdown of the trend line will welcome selling opportunities. Now look at what happened here. We saw the breakdown of the trend line, breakdown of the $1,948.30 level, which welcomed that selling opportunities. And remember also, we said a further breakdown of the 1,943 level will welcome more selling opportunities. So if you are taking advantage of this one too as well, in the last 24 hours, you would have scooped in about 140 pips on that first position and about 87 pips on the second position here. So it has been quite a wonderful experience for us all on the XAUUSD, and congratulations to everyone who has been part of this profitable journey. Now, if you still have a sell position running at this point in time, you know how we do it. We all want to be moving all stop losses to secure this current position. Now, from this current structure, I'm of the opinion that anywhere above the 1,938 and the 1,941 seems most appropriate to lock in your positions right now. So all stop losses should be moved within the zone. And remember that we want to give enough room for price action to breed, as we might likely see some retracement back into that zone before a downtrend continuation happens. So now, with a well-secured sell position, how do we intend to capitalize on this current market structure to give us an opportunity to trade for today? So one thing I noticed here this morning while trying to dissect the current market structure is the fact that since price tested the 1,943.34 level, we have seen price action fall into a range right now, giving us an insight into the level of indecision in this current market. Now, this might likely be as a result of the anticipation of the ISM Services PMI, which is coming up in about 2 hours from now. Let me see how many hours from now. Okay, in about 2-3 hours from now, the ISM Services PMI will be coming in, and as a result of this, we are likely going to be seeing some volatility happen in the market. Now, with this scenario here, you know how we do it. Whenever we have a range like this, we expect to see a breakout or breakdown of that range to give us a signal of where price action will be going. And from the situation of things right now, considering the strong bearish impulsive move to the downside, this old range here could transition into the chances of this range to transition into a downtrend continuation pattern is very, very high. So I have a position below the 1,934 level to capitalize on a downtrend continuation. So if you're already profitable this week, that is, if you have been part of this profitable journey since the beginning of the week, then you can afford to leverage on the profit we had made so far this week to test waters below the 1,934 level to capitalize on the downtrend continuation. Then with the stop loss, definitely remember we want to have our stop losses in place. Anywhere above the 1,938 level seems most appropriate, giving us about 45 to 50 pip stop loss, which is quite okay for this sell position here. So let's see how the market will play out. So we want to join a bearish move to the downside. Things are still looking very, very bearish on the XAUUSD. However, if we get a surprise in this market and price action breaks out of the 1,938, taking us out of our sell positions, then we might likely be getting ready for a momentum shift. But remember, at this point in time, I would not advise us to get too excited, so we are not having a buy stop order there, as we will need confirmations to happen. Now, one more thing I would like us to note here is this descending trend line since the beginning of this week. As you will see, after connecting the series of lower highs, we have a descending trend line which has been supporting this bearish momentum since the beginning of the week. Now, I would want to see price break out of that trend line for me to start considering buying. So let's see if the price will break out of that structure. If it breaks out of the structure, then let's wait for confirmations like a retest of either the trend line or the 1,938 level to capitalize on an uptrend. Now, we have levels again here, like the 1,943 and the 1,948 area, where if price continues to climb and find new highs, a breakout retest of the structures will welcome more buying opportunities in this market. So let's see how the market will play out. So our center of focus for today is basically between the 1,938 level and the 1,934 area, where a breakout or breakdown of that range will be welcoming a trading opportunity for us. So let's see how the market will play out in the next couple of hours, as this will give us an insight into where price action is likely going to be going for today. So I think it's on this note I want to call it a day, since I cannot get to see if there are any questions as regards to my explanation. But by tomorrow, I'm very sure that we should have resolved this issue so that we can be on the engaging mode one more time again. So on this note, I would like to draw the curtain, and for those who have been part of this journey since the beginning of the week, well done to you. Congratulations to you guys. And for the newcomers in the house, I hope you are able to gain one or two things from what we discussed today. And trust me, the more time you spend with us, the better you get to understand how things works here, and eventually be able to use the information you have gathered here to make your own independent trading decision. So it's on this note I wish you all best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this asset has been doing so far, and at the same time get ready for the last trading day of the week. And remember that tomorrow promises to be a very insightful edition of the Extra Speed Live. Remember, we have the NFP data coming up tomorrow, and of course we do want to position ourselves ahead of that event. So let's see how the market will play out, and by tomorrow we'll be here again to review and strategize, position ourselves ahead of tomorrow's session. So it's on this note I wish you all best of luck today, and do have a wonderful evening, everyone. Bye bye.